Greetings, members one and all of the Salivation Nation. Today is quite an exciting day. We're seeing the prices for both gold and silver. Well, let's go ahead and include platinum and palladium moving up quite a bit. So I think it's going to be quite exciting to see what this is about. And I think most of us know what it's about, at least to some degree. Trade. Let's explore. Yes, this comes to us from kitco.com. Gold price rally is more stable compared to silver, and that's true. This is Commerce Bank, and it typically is the case. Gold is that ultimate hedge, but as some have mentioned in the past, including me, that, silver being more volatile, well, it's going to move and react quicker when times like this happen. Silver's rally continues to heat up, with prices now trading above $19 an ounce, its highest level in 3 years. But one analyst isn't convinced investors have the same conviction compared to gold. In a recent interview with Kitco News, Eugene Weinberg, head of commodity strategy at Commerce Bank, said that silver is currently the hot play in the precious metals market, but the move is being driven by speculative interest. Gold's gains, on the other hand, are on the firmer footing as investors are looking for long-term safe haven assets to preserve wealth. Silver might start outperforming gold, but by no means is it comparable to gold, he said. With so much uncertainty in markets, not everything that shines is gold. Weinberg said that although momentum is propelling silver prices higher, investors can't ignore the fact that it is largely an industrial metal. Nearly half of the demand for physical silver comes from industrial uses. Gold is your storage of value. Silver is not an investment metal. It is purely a speculative investment. Well, that sentence is completely, not only I think it's grammatically weird, it's not right. Gold is also not an investment metal. Silver is definitely not an investment metal, but in many ways it's more speculative, potentially, but it's still money, and it is still a hedge. And I think that's part of what we're seeing here. So I kind of disagree with this analysis a bit. Weinberg warned that silver, like copper and other base metals, is a cyclical asset. I disagree with that as well. He added that the threat of a global recession will weigh on industrial demand, capping silver potential. Now, there may be some truth to that, but that is only because of the duality nature. Once we start to see demand increase in the physical world, what's known as the investment world, but I don't like to call it that, but I don't know what else you call that market, the physical market, for buying it as a hedge, then we're going to see a little bit of a different move, because keep in mind, it was that being able to get that kind of metal in 2011, which is what drove up that price. Tuesday, the Institute of Supply Management said that its manufacturing purchasing managers index dropped into contraction territory for the first time since September 2016, but industrial weakness can be seen in other economies around the world. Fears are growing that Germany, the biggest economy in the European Union, is falling into a recession. Weinberg said that this growing sentiment will weigh on silver, and very well could. Although silver could have more potential than gold in the short term, it comes with higher risk, he said. As investors, you have to ask yourself if you want to take an extra risk in an environment of growing economic uncertainty. So it does sort of a push and pull based off of recession fears and decreased demand for its use in the industrial sector. However, keep in mind that it also has medicinal benefits, and that will continue to grow. And that's much more recession-proof, I believe, than the industrial applications for silver and technological. Looking at gold, Weinberg said that it is only a matter of time before gold moves higher. He noted that the gold remains in a strong uptrend as global real interest rates continue to push further and further into negative territory. Both gold and silver have risen above Commerce Bank's year-end target of $1,500 and $18 an ounce, respectively. Although gold and silver have room to move higher, Weinberg said it's an indication that the current turmoil in financial markets will only get worse. At this point, though, you have to ask yourself what the world is going to look like if gold goes to $2,000. He said, I don't think you can rule that out because, unfortunately, I think the economic situation will get uglier before it gets better. Well, and he's referring to, in many cases, trade. And even Trump had mentioned that, with the markets the way they are, he's not really concerned with what the markets are doing because once a deal is reached, well, it's gonna boom. The stock market's gonna turn right around. And you know what? He's probably right. But what this activity today that caused the market upset and gold and silver to rise is based off of the of what's going on with trade. They haven't reached a deal to talk about it. So that's the latest worries right now. So it's impacting the Dow Jones Industrial Average. But make no mistake, it is affecting silver prices, especially today. Look at this. $19.34 as of the recording of this video. That silver is the clear winner in these metals. Tell me that is based off of its industrial use. That is it's acting as a hedge, I think, at this point. Silver is acting wildly like gold was. Gold climbed up a pretty good amount here by the dollar amount. It's almost at $1,550 an ounce, $1,550 an ounce, a 1.3% increase. But silver has moved up 4.37%, 80 cents now. It is getting closer to $20 an ounce. I posted a video just a few days ago, the slow march to $20. Well, we may be in a quick sprint to $20 before you know it, the way things are going now. However, I'll say this with caution with regards to silver. This quick, sporadic move upward could reverse course. And by the way, all the metals could take a dip. Let's say next week there is news that China and the United States delegations will meet to discuss trade. Well, we can lose all of these gains that we got now, and if that does happen, these metals can go right back to where they were before today and before yesterday, and we could see $17 silver again. I just don't know, but that's the thing to keep in mind is these fast increases look for it to potentially go the other way. Platinum is making a move up, getting closer and closer to that $1,000 level, and palladium is right on parity with gold now. It's up $4. Rhodium is up to $5,000 now, but it's down 1% today, negative $50 there. So, this could all be reversed almost as quickly as it went up. It could go right back down. So I'm cautiously optimistic in this terms. It's going to take a couple of days, I think, for us to see this action be able to be some withstanding. There's some technical analysis that could go along with this. The floors, the ceilings, the shorts, the puts, all these different things, the technical resistance. There's all kinds of things you have to factor in. But nonetheless, as of right now, we are seeing the gold to silver ratio still very wide in my view, but it's now down to 80.37. Now, at one time, it was over 93 to 1. But I think it's going to be interesting to see where this all plays out with the precious metal prices over the next week. And if there is a deal, what will happen? And the thing is let's say there's an announcement or there's some positive news and the markets move back a little bit. I think that we do see, a higher floor when these prices go down again and dip again, that when they rise again, then you are going to start to see that floor continue to rise, the dips. And we may see a time where literally not more than a couple months ago, $15 silver was kind of the norm, and that will become something of wishful thinking, and we may never see that for quite some time again, if ever again. Into a new age here. It is surprising to really, in my view, to see gold really go this high, in my opinion, because we're getting down to levels where they were back in 2013. And it's just fascinating to see these metal prices go up on a seemingly good economy, a strong dollar and the like. And that's the thing you have to think about. There's a lot of volatility and most of it is regarding trade and also Brexit. Brexit is also playing an effect because with Boris Johnson now, wanting to suspend Parliament, that's causing some unease, and so we'll see how this all plays out. It's going to be interesting to see, and I think a lot of these unknowns. But once these things get wrapped up, and there's some faith that things are smooth sailing and the economy continues to do well, and we get some positive numbers next quarter or what have you, well, we could lose all these gains in the precious metals. And by the way, that may not be a bad thing for those who, want a stable economy. Lower precious metal prices mean we can accumulate more. What we're seeing now is exactly what the metals do in times of economic uncertainty or crisis or concern. Post your thoughts below. I'd like to extend a multitude of gratitude to y'all for watching, and encourage you to please rate, share, comment, and subscribe.